Hey everybody, this is Rick with TickNation.com, and this is trade date January 31st, and this is our first official video newsletter. And I want to real quickly just provide a lot of thanks to those traders who've showed continued support, who have recently signed up for the newsletter. I mean, it's that kind of feedback, it's that kind of interest that allows both John and I to do what we do, to continue to develop these tools and to continue to develop additional resources for you guys to really dive into the methodology in which we trade, and that would be the order book. You know, we don't look at charts, we don't look at indicators, we just don't agree with that, quite frankly. Doesn't make it wrong, it's just how we trade. It's how we were taught to trade and how we will continue to trade going forward. So, you know, on January 26th, we had a webinar, and it was about 60 minutes long, and we felt it was just not enough time to be able to deliver the bullet points that you guys need to make a real assessment or build that foundation of prerequisites going forward, whether you join our training classes or participate in our live room. You know, the order book is a methodology that takes practice, but more importantly, it takes an understanding what to look for. You can spend a lot of time on your screen, but if you don't know what you're looking at and what you're looking for specifically, it's going to be very difficult, and the learning curve is going to be very steep. So that's kind of where we come in. You know, we've been trading the order book for over a decade now, and that's just how we trade. That's how we were taught to trade. That's how we understand it. So being able to deliver what we've learned over the years takes a little initiative. It takes some kind of content delivery mechanisms to you guys. Okay. So all that said, you know, we came to this consensus that a video newsletter is definitely going to be a helpful resource. So needless to say, I become this editor / producer, and quite frankly, it takes a lot of time and effort. You know, we trade to make a living, and now we're doing these additional components. But again, you know, it's the feedback that allows us to continue to press forward in this fashion. So we're going to dive right into this particular trade. This was a trade taken by a junior trader of mine who happens to be a family member that I've been mentoring over the course of the last few months that's had exceptional results. And this particular entry at 144.11, he joined the bid and was filled, and he liked that price action leading up to it, which was some action that you guys obviously are not seeing on this particular video, but what you will see is what kept him in this trade, which ultimately led to profit. Okay. Now going into this session at on January 31st, and that Tuesday, we really had a upside bias going into that day, and the reason for that is at 144.10 has been an area that we've been watching since Monday, okay, the 30th, and it was actually a level that we watched, that we saw on that previous Friday, that there was significant action taking place, which ultimately led to watching this level here. What you're seeing now, that 144.10. So this open, Chicago opened at 144.14. That was the pit open. So we're just underneath the pit open, and we're right around that floor of 144.10 in this the start of this session. And in the next few minutes, what you're going to see is 431 contracts trade at 10. Okay, and it never goes offered. Now that kind of size in the bond market is substantial, knowing or considering that on the bid and offer, typically you're going to be about 500 deep. So someone hits these 10s 431 times once. Okay, so it's probably one guy or maybe two guys hitting into that price. It never goes offered, stays bid. Matter of fact, the bid pulls away to about 51 contracts, and no one's willing to take the rest of them. Folks, that's a sign of strength. Okay, let me repeat myself. That is a sign of strength, and that is one of many different things that you look for in the order book. Okay, and he liked his entry, but certainly now he liked the probability of this trade working out. Okay. Sometimes you make an entry and you're already in profit. You already have the edge. You already have a free look. In this particular case, he liked his entry. He was offsides by 1 tick, and on the onset, he knew what his risk was going to be. If 09's trade down and goes offered, and we start trading away, it's well, he's going to bang out for a 3-tick loser. He's not going to question. He's going to get out because he always has the ability to get back in. Okay. So now, after he sees this, the key component here is what he's looking for now is these offers to start to pull away, and the prices to trade and bid start stacking up in the book. Okay, because that's what you're looking for. You're looking for high probability setups that lead to momentum trading, or lead to that momentum move, if you will. Okay, so when he's seeing this take place, he knows immediately what he's looking for. Okay, he knows his risk. And now he's looking for guys to start covering. He's looking for other traders to jump on board and start hitting the next price up. Because guys that are short 12, 11, and 10, and they're going to see this price action, they're either going to cover at scratch or take a few ticks loser. Okay? If they don't, they're going to get ran over. Now, what he's looking at this point is a discretionary target. Now, I'm not a target person per se. Me personally, I like the price action ultimately to determine if I'm going to get out of the market. But in this case, it was well justified, because the 15s end up being the nuts. I mean, 15s trade through, goes bid, we trade a few contracts into 16, and we come off, 15s go off, and we end up selling down at 09. We ended up getting back on board, because always never trade. We got back on board on the 10s and rolled that up to the highs of the day and covered there, and we ended up getting long at the pit open, which ultimately led to the biggest move of the day. Okay, and that actually took us to a level we were watching, which was 145 to 145.15, which is a level that we had been anticipating that might have some challenges. Okay, so knowing that non-farm payroll is coming out, everything kind of just jived together, if you will. Okay, so that's pretty much it in a nutshell. I mean, there's been so much discussion about scalping, and you're only going to take an entry and take a 1-tick winner and get out, and you risk 4 ticks. That's just not how we operate. It's not how we scalp. What we're looking for is high probability setups that are going to yield us 4+ ticks. Sometimes we only do take a tick because the price action tells us otherwise, right? And sometimes we take a loser. We're not in the business of taking 1 tick. We're not a high frequency trading organization, even though they're out there, and there's ways to spot them. And these are, this is one of many different things that we're going to show you guys, and many different tools to put in your tool belt so that you can become a better trader within the order book. Okay? And if you have to look at charts, you certainly can do so, but I think you need to focus more on the book as opposed to charts. I mean, we all look at charts during our pre-session routine, no question about it, to spot levels. But as you trade the order book, what you will ultimately identify through recall is levels, and you can recall levels over the course of a week. And that just takes practice. So you build these exercises or reflexes, if you will, as time progresses, as you start watching the order book. Okay? So it's really important that you understand the mechanics of how trades are facilitated, because ultimately it is one big giant poker game. I'm not going to lie about that. Okay? There's games that take place in the order book. But one thing about trading these markets is you cannot hide the size in which is being traded. It's very transparent, and that's one thing that you need to be cognizant of. So this is one of those particular entries that I wanted to show you guys because of the importance of a specific thing that he spotted that ultimately led to him generating 4+ ticks in profit, and got out, ended up getting back into the market 2 more times, and ended up with a nice profit for the day. In any event, that's pretty much in a nutshell, guys. Reach out to us, send us an email, let us know, and don't forget, Saturday at 5 p.m. Eastern is the last cutoff for registration for the trading classes starting on Monday. Reach out to us, give me a call, send us an email. Great trading. Good luck, guys.